It is the final class of chapter 22, which is about the review and appraisal of individual performance. And in this class, we'll continue our discussion on the barriers of effective appraisals, which is in the second part of the discussion. So first of all, I would like to highlight what are the solutions to the barriers to effective appraisals. Before sharing the proposals or the solutions, here I would like to address one of the key concerns or main barriers to effective appraisal, which is the view of employees that the annual appraisal is not important and that nothing is done after the appraisal interview is finished. In other words, staff or the employee is unhappy if there's no further follow-up actions after the appraisal interview, because they think the appraisal interview is just a process or even just a step in the organization for the manager to do it. It's not helping them to solve the problems. And to deal with this, there are some practical ideas that can help. For example, like to make sure there is a system of follow-up and feedback relating to the appraisal. So in other words, after the appraisal interview, maybe after 3 months, the employer and employee or the manager and employee can review again what are the actions that follow up well, or what should be done better. And next, the agreements between the employee and manager relating to further training and development should be made part of the official record of the appraisal interview. In other words, in the appraisal interview, the manager mentioned that training or development will be provided to the employee, but no deadline highlighted or record in the document, then it cannot be happened because there's no record and no follow-up actions on or tracking on the record. So there should be agreements between the manager and employee to do it. Another idea is the agreed action plan should be reported to senior management or the HR department. That is, the appraisal interview should be documented or should be well documented with the action plan and filed with the HR department, for example. And also the manager should ensure that any training and development agreed should be arranged, and this should be discussed at the next appraisal meeting. So it helps the employee to be comfortable about the appraisal interview, which is value to him or her in the position. And in general, there are 4 F's which considered to be the best practice for appraisal. So let's see what are the 4 F's. The first F is firm. That means the managers should be willing to discuss negative as well as favorable aspects of performance. In some circumstances, the managers only focus on the negative behavior or negative points in the appraisal interview, which is not right. The appropriate approach is to discuss either the negative or the positive side of the employee. It's fair, and for good performance should be recognized as well as appraised during the interview or the appraisal. For negative or areas to be improved, the manager should help or coach the employee to do better in the next appraisal period or next task. The second F is factual. It means that the discussion or the appraisal should be subjective aspects of performance should be avoided. What does it mean? That means all discussions should base on the facts, not on subjective or personal opinion. It should be avoided, especially on the performance. It's fair because the appraisal should be a review or feedback of employees' performance. It's not a debate or argument or arguing in the appraisal period. So it should be based on facts only. The third F is fair. All employees should be treated the same. So it's quite simple to understand what's the principle of this F under the appraisal. And the fourth F is frequent. The appraisals should be held on a regular basis rather than just when a problem arises. So as we mentioned, the appraisal should be regular or frequent. That can help the overall performance appraisal or performance management process. So all four F's are suggested as the best practice for appraisal. And next, we turn to another point or another discussion about how to evaluate the effectiveness of performance appraisal. And for evaluating the appraisal process, it can involve different things. We highlight 5 points here. The first point is calculating the cost and benefits of appraisal process. So as in the business, the cost and benefits should be balanced. So it means that we should not pay $100 to protect only $10 stuff, because the cost is much higher than the benefits. So we need to calculate the cost and benefits of the appraisal process, which make it more efficient and effective. And the second thing here is monitoring performance results to see if there have been improvements. So as I mentioned to you, for any appraisal, there should be some follow-up actions and follow-up or action plan that both parties, that means the employee and the manager, can track on how to improve. The third point here is checking the uptake of training and development opportunities. During the appraisal interview between the employee and manager, some discussions will be on the training and development. That is, the effective appraisal process should involve the discussion about the training and development opportunities. It's not just focused on sharing the negative side of the employee. And fourth, asking appraisers and appraisees for their opinions on the process. It's about the overall performance appraisal process. So some feedback from both sides, the managers and the employee, about the appraisal process, whether there's some improvement in the process itself. And the fifth point here is review of other indicators such as staff turnover, which is a figure that is too high or too low, could indicate a problem in the organization. And I will come back to staff turnover later on, but the discussion during the appraisal process or the review of staff turnover in the appraisal process is one key step or key ideas on how to improve the organization or the individual performance. Before talking about the staff turnover, and I would like to show you what this scholar Lockett argued about the appraisal process and what is the idea on the appraisal process. The first, relevance. The relevance. He raised the question that, does the system have a useful purpose? And is it relevant to the needs of both the organization and the individual? Do the appraisal criteria link to the needs of both parties? So it means that the appraisal interview, the discussion, should have a purpose, or the overall system should have a purpose that all participants should know well about the criteria, the needs of the criteria of the needs for all parties, and they can contribute in the process. So all the discussion should be relevant to about the individual contribution as well as the organization needs. The second thing about the appraisal process mentioned by Lockett is fairness. Is there reasonable objectivity and standardization of criteria throughout the organization? So objectivity, as we mentioned about the 4 F's, which is relevant to the fair, because all the appraisals should be fair and factual. So objectivity means fair and factual. And next, serious intent. Is the management committed to the system, or has it simply been thrust on them by the HR department? Do the appraisers have training in interviewing and assessment techniques? Is there a demonstrated link between performance and reward? So it raises a very good question about the appraisal process or the appraisal interview, because the management or senior management has to commit it on the overall process. They should trust the result, the assessment or the appraisal process, and the appraiser need to be aware training is needed in order to improve the individual performance as well as the organization performance. And there should be a link between the performance and reward. If there's no link, then what's the point to go through the appraisal process? The question asked by many employees. So they think the appraisal process can contribute to their rewards as well. So they would like to participate in the appraisal. They would like to improve. They would like to participate in the training as well. If the management doesn't think the same, they think it's just the process, cannot link to the reward, then it comes out to a very bad situations. The staff or employee, they don't participate in the appraisal process. Fourth, cooperation. Is the appraisal a participative, a problem-solving activity, with the appraisee being given time and encouragement to prepare for it? Is it jointly agreed conclusion arrived at by the end of the appraisal? So what does that mean is the appraisee should have sufficient time to prepare for the appraisal interview, for example. So all parties, for the staff, for the managers, they need to participate or active participate in the appraisal process. They are encouraged to do it, and they should agree at the end of the appraisal that whether they found there should be some areas to be improved, there should be some areas should be recognized, and they put in the documents and provide an action plan on how to improve the areas that can be improved, for example. So the cooperation is needed between the manager and the employee. And the fifth point mentioned by Lockett is efficiency. Is it costly and difficult to administer, and does it seem too time-consuming compared with the value of its outcome? So it's also about what we mentioned before, the cost and benefits. So efficiency means that we don't want to spend $100 in order to protect the $10 worth of assets, for example. So here we would like to look at how many costs incurred for the appraisal process. We would like to make it efficient. We don't want to have the cost more than the benefits in the appraisal process. So we come to another topic, as I shared with you before, that's the staff turnover. And there are few causes of staff leaving the company or the organization, we can categorize them into three main categories. First is discharge. So it's a simple word that as a result of employees' instability or disciplinary action or redundancy. So discharge just means we let go the staff because he or she is not performed, or the organization need to go through a painful period, so we have to go through the redundancy period. Then some staff will be discharged as well. So it's the first category is discharge. The employee, they don't want to do it. Is the company need to do it because of some issues for the employee itself or for the organization. Say example is redundancy. Another is what we call is unavoidable staff leaving because say some milestone in life like marriage, moving houses, illness or death, or say some of a significant event in their life. So the employee need to change. They cannot serve the employer because there's some changes in the life. So it's unavoidable from the company point of view. It cannot be avoided. It's a natural. And the last category here is avoidable. Say due to pay, due to the work conditions, the relationships with the colleagues. It's about the staff feeling. So they are not happy in working in the organization, maybe due to the pay, maybe due to the working conditions, maybe due to say the relationships, say with the other colleagues. Then they will leave the organization. But those factors or those issues can be avoided from the organization point of view. So staff turnover, we just share with you about the causes of staff leaving, and here is about how to calculate the staff turnover. And for staff turnover, it can be calculated by dividing either the total separations or the total replacements. And then the denominator is the average number in the workforce and expressing the results as a percentage. So in other words, you can put the total number of separations divided by the average number of workforce. Then you can come up to the staff turnover ratio for an organization. Or you use the total replacement divided by the average number in the workforce. So here we share with you two definitions about the staff turnover. But you can see that the examination of this number may highlight some vital information. Say, for example, if the number is quite high, 20%, for example, the staff turnover is 20%, that means one staff will leave the organization out of 5 staff. It's quite high, for example, 20%. Then we need to examine what are the factors that drive this figure. So what are the story behind it? So is it poor selection techniques, or poor working conditions, or the pay is not competitive, the salary is not competitive, or any issues between the colleagues in the organization? So we need to examine in details if we find it is a high staff turnover number. And the process of staff appraisal and assessment should highlight any causes of dissatisfaction. That is, the organization should look at the appraisal process to identify the issues or problems that cause the staff turnover is high. So they can understand well and to find the solutions and remedy them before the employee loses motivation, looks for another job and resigns. So how to keep the staff turnover number on a reasonable level is one way is to do the staff appraisal or to follow through the process well, respect the results, link the performance with the reward, recognized by the staff as well, so they have the channel to feedback, to provide the feedback to the company. Then it helps the employee, or it helps to motivate the employee as well as to maintain the staff in the organization. So the process we just mentioned is to solve the avoidable staff turnover. So that's the question time. As part of a regular appraisal, a manager has stated that one of their employees is strongly disliked by all their co-workers. So what aspect of appraisal best practice is the manager failing to display? So whether it's firmness, fairness, frequency of appraisal, or factual discussion. So if you remember what we discussed before, 4 F's, what do you think about this strongly dislike, this statement? I think it's quite firm, to be frank. So you think whether it's fair or factual? Do you think it is facts or fair employees should be treated the same? Another question is, a firm has an employee turnover of 2% per annum, and this indicates that the review and appraisal process must be excellent. So whether this statement is true or false. So I'll give you one idea on this question is 2% per annum employee turnover means that the company needs to spend 50 years to change all the staff in an organization. So do you think it is too low or too high, or whether it is the appraisal reflect the appraisal process is excellent?